Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what companies are doing. This time we're diving into a 10K report, which is like a yearly checkup form that companies have to file with the SEC. And let me tell you, this one has a few twists. It is about some feeder fund. It sounds like they're trading instead of actually building anything. Let's decode it together. We are looking at Man-AHL Diversified I LP, a company with a rather straightforward aim, speculative trading. Think of it as a high-stakes gambler in the world of physical commodities, futures, and related contracts. It kicked off in 1997 but started trading in 1998. Now, the report mentions bodies like the Commodity Futures Trading Commission, CFTC, and the National Futures Association, NFA. These are essentially watchdogs ensuring fair play and preventing market manipulation in the futures and swaps markets. They also have position limits, maximum amounts you can hold in any specific market. Imagine the government capping how much bread someone can buy in order to prevent cornering the supply. Of course, this report wouldn't be complete without a hefty section on risks. Investing here is super speculative and you might lose everything. There's market volatility, leverage which can magnify losses, and potential illiquidity, meaning you can't always sell when you want to. They also rely heavily on computer models that, if wrong, could make some very costly missteps. It also talks about health crises, a very 2020s thing to talk about. Let's check on their cybersecurity efforts. The general partner has some plans and procedures to manage information security and uses a framework to identify important risks. They also seem to monitor their service providers to identify any threats. The report claims that the board discusses cybersecurity risks and reports its findings to the board, and that their chief information security officer has a lot of experience in the field. However, it also states that despite their best efforts, there is no guarantee a future cyber incident would not materially affect their business. This part is not applicable because the company doesn't directly sell common stock on an exchange, which makes figuring out its market value harder to determine. Let's dive into the financial data to understand how the company did. It has a summary of operations and total assets for the last 5 years. Let's take a quick look at the numbers for 2024 and 2023, comparing them. We can see that in 2024, the net income was about $1.4 million compared to a loss of about $4.2 million the previous year. So a definite turnaround, but total assets decreased. They were around $77.27 on $0.4 million compared to a loss of about $4.2 million the previous year. So a definite turnaround, but total assets decreased. They were around $77.20 of about $4.2 million the previous year. So a definite turnaround, but total assets decreased. They were around $77.24 million the previous year. So a definite turnaround, but total assets decreased. They were around $77.24. The net income was about $1.4 million the previous year. So a definite turnaround, but total assets decreased. Then we see the net asset value per unit for different share classes. For Class A1, it went up slightly from 4,868 to for Class A2, it went up more significantly, from 5,794 to $5,931 to $5,931 to $5,931 significantly. From 5,794.5 to 7,945 to $5,931 to $5,931, 5,794.5 to $5,931. There's a table that reveals how the partnership's assets were split across different markets. As of the end of 2024, the largest chunk, 8.610% of their capitalization, was in currencies, followed by stock indices at 3.77%. This gives you an idea where they're betting the most. Management's discussion then mentions the AHL Diversified program. This program thrives in trending markets but struggles when markets are stagnant. They highlight how the past can't predict future performance, especially with new players changing the game. This suggests a market environment that has become harder to anticipate. In the section for results of operations, it mentions that the ending equity was $76,261,491 in 2024 versus $86,724,037 in 2023. So we can see that despite them gaining profitability, their ending equity, or the value of their holdings, went down significantly. For market risk, the report dives into value at risk, or VAR. This estimates potential losses in different market sectors. It shows a risk of ruin not typically found in most other investment vehicles, since they make big bets with borrowed money. In 2024, for example, the average value at risk for currencies was about $6.7 million, or 791% of their average capitalization. This tells you about how much they could reasonably expect to lose on average in a bad trading day. But we can see that this does not account for the so-called risk of ruin. In another interesting section about breaches in information technology security. Security breaches may also result in misappropriation of assets and could create significant financial and/or legal exposure for the partnership. Finally, there are some certifications by the company's officers regarding the validity of this report. So what does all this mean for Man-AHL Diversified I LP check? Well, the financial report reveals a complex picture. On the one hand, the company showed a good income and some promising returns in specific sectors like trading in credit default swaps in some months. That's a definite plus. However, there is a big negative. I'm not happy with the overall decrease in equity during 2024. With a very dangerous investment strategy, it leaves a high risk of ruin to opportunities. While the report seems to indicate that they might be able to use their expertise in market analysis to capitalize on future trends. Ultimately, this is a high-risk investment with some serious strengths and worrying weaknesses. The report does not look very promising, and one has to be very careful before investing in a feeder fund that trades on swaps, a recipe for disaster if the models used have errors. Thanks for watching. If you enjoyed this corporate decoding, please subscribe, like, and comment.